As we step into September 2025, the cryptocurrency market finds itself at a pivotal crossroads. The digital asset landscape is marked by heightened volatility, with investors and traders alike closely monitoring every tick of the market. Over the past few weeks, the market has experienced significant turbulence, with prices swinging dramatically in response to both global economic developments and industry-specific news. This period of flux has left many participants on edge, as uncertainty looms over the short-term direction of the market. The most notable recent development is a sharp dip in total cryptocurrency market capitalization, which now hovers around the $4 trillion mark. This decline represents a significant pullback from the highs seen earlier in the year, when optimism about regulatory clarity and institutional adoption drove prices upward. The current downturn has been attributed to a combination of macroeconomic headwinds, including concerns about inflation, shifting monetary policy, and geopolitical tensions that have rippled through global financial markets. High trading volume across major exchanges suggests that a significant sell-off is underway, as investors rush to reposition their portfolios in response to the market's downward momentum. The atmosphere on trading floors and in online communities is tense, with many market participants expressing concern about further declines. Order books are filled with large sell orders, and the rapid pace of trading activity reflects the urgency with which traders are seeking to manage risk and preserve capital. Amidst this uncertainty, Bitcoin has once again asserted its dominance, now accounting for over 55% of the total cryptocurrency market capitalization. This surge in Bitcoin's market share is a clear indication that investors are seeking a safe haven in the most established and widely recognized digital asset. Historically, periods of heightened volatility have seen capital flow out of riskier altcoins and into Bitcoin, as its perceived stability and liquidity offer a measure of protection against broader market declines. Meanwhile, Ethereum is showing signs of reduced network activity, as evidenced by persistently low gas fees. This trend is often interpreted as a bearish signal, suggesting that fewer users are engaging with decentralized applications, DeFi protocols, and NFT marketplaces. The slowdown in on-chain activity may reflect a broader sense of caution among investors who are waiting for clearer signals before re-entering the market in force. Despite the prevailing gloom, not everyone is pessimistic. Some analysts point to historical trends, noting that October has often been a strong month for Bitcoin and the broader crypto market. In previous years, the onset of autumn has coincided with renewed bullish momentum, as institutional investors return from summer breaks and new capital flows into the market. Optimistic traders are closely watching for signs of a potential reversal, hoping that history will repeat itself and spark a fresh rally. Adding to the intrigue is the possibility of an interest rate cut by the U.S. Federal Reserve. Such a move could inject new energy into risk assets, including cryptocurrencies, by making borrowing cheaper and encouraging investment. Market participants are keenly attuned to any signals from central bankers, as a dovish shift in monetary policy could serve as the catalyst for a broad-based rally. As September unfolds, all eyes remain on the interplay between macroeconomic forces and crypto market dynamics, with the potential for rapid change just around the corner. Bitcoin's recent volatility highlights just how unpredictable and dynamic the cryptocurrency market can be. In the past few days, we've seen dramatic price swings that have left both seasoned traders and newcomers on edge. The rapid movement in price is a stark reminder that, in the world of digital assets, fortunes can change in a matter of minutes. Every tick on the chart tells a story of fear, hope, and speculation, as millions of dollars move in and out of the market at lightning speed. This volatility is both a risk and an opportunity, drawing in those who thrive on the excitement and challenge of trading in such an environment. After a sharp and sudden dip that sent shockwaves through the market, buyers stepped in with remarkable speed and determination. Their collective action pushed the price back up, demonstrating the underlying demand and belief in Bitcoin's long-term potential. This rebound was not just a technical move, it was a psychological one, restoring some confidence among investors who had been rattled by the drop. The swift recovery also highlighted the resilience of the market, as well as the willingness of buyers to defend key price levels when tested. Right now, all eyes are on a crucial technical barrier, the resistance at $117,500. This level has become a psychological battleground for both bulls and bears. It's not just a number on a chart, it's a line in the sand that represents the collective sentiment of the market. Breaking through this resistance could open the door to new highs, while failing to do so might trigger another round of selling pressure. Traders and analysts alike are watching this level closely, looking for any signs of weakness or strength. If Bitcoin manages to break above this resistance, it could signal the start of a renewed upward trend, potentially attracting a fresh wave of buyers and speculators. Such a breakout would likely be accompanied by a surge in trading volume, as market participants rush to capitalize on the momentum. This could restore optimism and confidence not just among traders but across the broader crypto community. The excitement of a breakout often leads to increased media coverage and social media buzz, further fueling the rally. Right now, traders are laser-focused on this resistance level. Many are developing strategies to either capitalize on a breakout or protect themselves in case of a rejection. The outcome at this price point could set the tone for the next phase of the market. A successful breakout could restore market confidence and encourage more participants to enter the market, while a failure could lead to increased caution and even panic selling. The stakes are high, and every move is being scrutinized in real time. For now, the market remains balanced, with no strong trend in either direction. Traders are waiting for a clear signal, watching the charts and news for any catalyst that could tip the scales. This period of consolidation is often a precursor to a major move, as pressure builds and anticipation grows. Whether the next big move is up or down, one thing is certain. The fight for $117,500 is far from over, and the outcome will shape the next chapter in Bitcoin's ongoing story. Bears are eyeing Bitcoin's support at $107,000. This level has been a strong floor, but a break could shift sentiment. A fall below could trigger stop-loss orders, accelerating a decline. A potential double-top pattern looms, signaling a bearish reversal. A drop to $100,000 would be a significant blow. The defense of this support is crucial for bulls. The Bitcoin market is sending mixed signals. Whales are selling off holdings, contributing to recent market drops. Meanwhile, institutional buying remains strong, providing a counterbalance. This tug-of-war creates uncertainty about the market's next move. Historical patterns suggest a new all-time high could be on the horizon. Ethereum faces a critical moment after breaking down from a triangle pattern. The key support is at $4,060. A successful defense could lead to a recovery. A failure would confirm a bearish outlook, targeting lower levels. Falling trading volume suggests waning interest, but also a potential opportunity for bulls. The market is at a crossroads, with the next move being crucial. Ethereum's path to recovery is fraught with obstacles. The 20-day EMA acts as a ceiling, hindering upward momentum. A rejection here could lead to another test of the $4,060 support. Bulls need a strong push above the EMA to shift sentiment. Without it, the risk of a deeper decline remains high. Solana is currently at a crucial crossroads, as it tests the strength of its 50-day simple moving average, a technical indicator closely watched by traders and investors alike. This level, often seen as a barometer for short-term momentum, has historically acted as both a springboard for rallies and a floor during corrections. The price action around this moving average is drawing significant attention, with market participants closely monitoring every tick and candlestick formation. The $206 support level in particular has emerged as a psychological and technical battleground, where buyers and sellers are locked in a tug-of-war to determine the next direction for Solana. If Solana manages to hold above this key support, it could spark renewed optimism among bulls, potentially leading to a swift rebound and a retest of recent highs. Such a bounce would not only reinforce the importance of the 50-day SMA, but also signal that buyers are willing to step in at these levels, absorbing selling pressure and defending the uptrend. On the other hand, a decisive break below $206 would be a clear warning sign, suggesting that bearish momentum is gaining the upper hand. This could trigger a wave of stop-loss orders and further selling, confirming a shift in market sentiment and possibly ushering in a more prolonged downtrend. Should the $206 level fail to hold, traders will be looking to the next major support zones at $185 and $175. These levels have previously acted as strong areas of demand, where buyers have stepped in to halt declines and reverse the trend. A move down to these supports could present new buying opportunities for those waiting on the sidelines, but it would also test the resolve of long-term holders. The reaction at these price points will be critical in determining whether Solana can stabilize, or if further downside is likely. If Solana fails to find support and momentum wanes, the price could become trapped in a prolonged period of sideways consolidation. This kind of range-bound trading often reflects uncertainty and indecision among market participants, as neither buyers nor sellers are able to assert control. During such phases, volatility tends to decrease, and trading volumes may drop, making it challenging for traders to identify clear trends or profitable opportunities. Extended consolidation can also test the patience of investors, leading some to exit their positions in search of more dynamic markets. Ultimately, the ongoing battle at the $206 support level is pivotal for Solana's short-term outlook. The outcome will likely set the tone for the next phase of price action, influencing not only technical traders, but also the broader sentiment within the crypto community. Whether Solana can defend this crucial level or succumbs to selling pressure will be closely watched, as it could determine the trajectory of the asset in the weeks to come. Solana's future hinges on the 50-day SMA battle. A rebound could reclaim lost levels, while a failure would confirm a bearish trend. A break above the 20-day EMA would be bullish, targeting $260. Without a strong bounce, the risk of a deeper correction looms. The market is at a decision point, with the next days being crucial. As September ends, key levels will guide the market's direction. Bitcoin's resistance at $117,500 is crucial. Ethereum's support at $4,060 is under scrutiny. Solana's 50-day SMA battle will influence its trajectory. Macroeconomic factors like interest rate policies could impact the market. October's historical strength offers hope, but caution is advised.